Righty. Good morning, everyone. Good morning. Hope you guys are doing well. Today is March the 9th. Currently, big push down here in the overnight session. So far, we are rebounding here in the pre-market, kind of right at where we opened up yesterday on the futures. We'll go over a bunch of these tickers coming into today, higher time frames, trying to break outside this range here as well. But as you can see, we're rebounding so far. So we'll talk about this here in a second. What's up, everyone? Good morning. Hope you guys are doing well. Hope you guys had a great weekend. What's up, Marcus? Good morning. TW, Martin, B Roots, Victor, KO, Cody, Stefan. Good morning, Stock. I am Juan, Martin, 50, Mozzie. Good morning, Cinna. Good morning, Deuce, Lamit, Jose, Crypto, Ashley, Palms, Ryan. Yeah, what's up, everyone? Hope you guys are doing well. Let's first head on to the economic calendar, and then we'll get started here. Okay, so first things first, let's kind of talk about some of the news events that we had over the weekend. Of course, the main thing, oil spiking almost at $100, overall markets dropping, VIX almost at 30. Sorry, VIX is above 30 here, dropping here in the pre-market. But a lot of things are kind of spiking, overall markets dropping. In the overnight session, we are rebounding here now as well. We'll kind of talk about the higher time frames because the Qs is trying to break outside of this range. As for some of the economic calendar and some of the red folder news events that we have coming into this week, what we do have here is some CPI that is going to be at 8:30 a.m. Eastern Standard Time, finally back on a Wednesday. So this is going to be fairly important coming into market open. Thursday at 8:30, we have unemployment. And then on Friday, we have 8:30 here as well. We have core PCE along with prelim GDP. And then at 10 a.m., we have the JOLTS opening. So this is what we have coming into market open here this is what we have for the red folder news coming into this week. As for some earnings, most of the earnings are over, but some things to keep in mind this week. The biggest ones is going to be Oracle. That's going to be Tuesday after close. And then you have a lot of smaller ones, right? Adobe and some other ones to keep an eye out for as well. But this is what we have for today and coming into this week. Now let's go on to straight into the charts to see exactly what we're looking for. All right, let's go on to the ES. So as you can see, first things first, if you go into the higher time frames, ES along with the SPY, you can see the overall markets, at least for the ES, dropping all the way down into a key level of support, which is all the way back from December of later of last year. As you can see so far, some buyers stepping in right off this 6,600. What we have here is basically this range. And as you can see on Friday, weak candle closure. And now, right, price pushed all the way down. So far, buyers are stepping in right off this key level. So some of the levels that we can have marked out coming into today, I basically have our last week's lows. We can mark out now. It's going to be our after hours lows, along with our low that we created all the way back from December of last year. And now we can go back onto the lower time frame. So coming into today, the key levels that we're going to have marked out, we can actually mark out another level here as well, which is basically our open that we had on the futures, which is at 6 p.m. Eastern Standard Time. So the key levels that we have coming to today is going to be our 6690 along with our last week's lows, which is our 6720. So coming to market open here, if we do want to see longs, as you can see, nice buyers stepping in off our 6600, push back up in towards our gap that we created. If we do want to see a potential gap fill coming to market open, right above our 6690 for potential push up and towards our 6720. As you can see, we do have a gap here. A lot of times, as I mentioned, whenever we do have these gaps in the markets, they tend to fill, right? 70% of the time in a 48-hour period. So this is what we have for the ES coming to market open. If we reject off this level, right, kind of push towards the downside, you could be looking for the reclaim later into the day for this continued push back up and towards that gap fill we have created. If we're looking for some downside today, only possible scenario, we have actually two potential rejection here right off the bat, which will be our 66.90 for that continued push back towards the downside. Another possible scenario, of course, is going to be that full gap fill that we have created, reject off this level and push all the way back towards the downside here as well. So the key levels, we're just going to mark out that gap, which is going to be the top of the gap. And then we also have that full gap fill, which will be the close all the way back up and towards essentially our last week's lows here on the ES. So these are the levels 66.90 along with our 67.20. As for the as for the SPY coming to market open, key levels that we're going to have marked out is primarily just going to be our 670, which is going to be our last week's lows along with our Friday's lows. If we go back onto the daily time frame, you can see here, we basically broke outside of this range. So as you can see here on SPY, last week we opened up outside of the range, buyers stepped in. On Friday, you can see we ended up gapping, we didn't end up gapping down. We basically broke outside of this range, and as you can see, we end up having a weak candle closure underneath this 675. So as you can see so far for the SPY, broke underneath our 670. Next levels towards the downside, of course, is our 650. So for the levels and what we can have marked out coming into market open, let's just go back onto the lower time frames. Let's just mark out this level, which is going to be our 660s, and then next level, of course, is going to be all the way down and towards that 650. So for the SPY coming into market open here today, key levels that we have marked out is going to be our pre-market lows, which happens to be our 660s, and we also have our previous day lows, which is going to be that 670s. So coming into market open here, key levels that we're going to have marked out, 660s along with that 670. If we do want to see any sort of push towards the downside coming into market open, we can take a look at the futures chart, which of course will be this 6690. If you look at the SPY chart, key levels that I'm going to have marked out personally is really just going to be this 667. So if we do want to see some upside coming into market open here today, we'd like to see it above our 667 for potential gap fill back towards the upside, back up and towards our 670. Another possible scenario here is going to be that bounce off our 662 for that push back up and towards that 670 here as well. So these are the two scenarios for upside. Of course, if buyers step in right off the bat, let's say we have a huge bounce within the first 5 to 15 minutes of market open, then of course we can be looking for that mean reversion for that pushback towards our previous day close and above. So that's what we have for the SPY coming into market open here today. If we do want to see some downside here, since we had a big push in the overnight session, we're kind of rallying here. We need it below a certain key levels. Number one, we like to see it maintain underneath our previous day lows if you want to maintain a bearish stance. The next level that we can have marked out as well is going to be this 666. Underneath it, we can see your pre-market lows here and below. So we can mark out this level and we can trade this over 666. Okay, now let's go on to the NQ. So as you can see here for the NQ on the higher time frames, we're currently trying to break outside of this range. So as you can see here for the NQ, we'll take a look at the Qs here as well. But basically for the NQ, you can see how many touches we've had off this general area. 1 touch, 2 touch, 3 touch here on the daily chart, trying to break underneath it here in the overnight session. But currently some buyers are stepping in here and pushing this back towards the upside. So if we go back on to the lower time frames, key levels that we're going to have marked out coming to today, or the main level, of course, is going to be our last week's lows, which happens to be our 24,400. So if we go back onto the lower time frames, key levels coming to today, we're just going to mark out that 24,400. Other levels that we can have marked out here now is just going to be that previous day lows, which happens to be our 24,640. So coming into market open here, let's keep an eye out on these key levels. If we do want to see a potential mean reversion back up and towards our 24,600 for this continued pushback towards the upside. This is really the only long scenario that we have coming to market open. If we reject off this level, and let's say we reclaim it later into the day, we could still be looking for this continued push back towards that full gap fill that we have created. If we do want to see some downside, potential rejection off this level for this continuation down in towards our pre-market levels here and below. Or if we fill the gap right off the bat, we could be looking for the gap fill rejection for a push right back down in towards that 24,400. So this is what we have for the NQ coming into market open here, of course. Now let's go on to the Qs. If we go into the QQQ, as you can see here on the daily time frame, the key levels that we have marked out, of course, is going to be this range in between our 596 along with our 620, and then we have this higher time frame range marked out here as well, which of course is our 588 along with our 636. So as you can see, we have a tighter range here on the daily chart, of course, followed up by this bigger range on the higher time frames. What we like to see for the NQ moving forward is the break underneath and of course continuation. Currently we're breaking in the pre-market and now buyers are stepping up and trying to push this back towards the upside. So if you look at this on the lower time frames, as you can currently see, opened up underneath the range. Now you can see buyers are trying to step back in above our 590s. So coming into market open here, the key levels that we can have marked out is going to be that previous day lows along with our 594. So coming into market open here on the QQQ, key levels that we have, of course, is going to be that 594. Above our 594, we can see this push back towards the upside, up and towards that 598. Another possible scenario here, right? Reclaim back above that 594, push back up and towards that 598 here once again. So this is what we have on the QQQ coming to market open. If we do want to see some downside, pop and fade off that 594 for that continuation right back down in towards our pre-market levels and below, or of course that pop and fade once we fill that full gap, rejection, and then push right back towards the downside. So this is what we have for the markets coming into today here on the SPY and Qs. Now I'm going to go on to the SMH, which is currently gapping down here as well. We'll head on to the IWM and we'll go over some gold, silver, and then we'll head on to the major tech names that we do have for today. If you guys do have any charts, you guys can now drop them in the chat. If you have any tickers or any charts you'd like me to go over. If you guys are enjoying this so far, I appreciate it if you guys drop a like. If you guys haven't joined the daily watch list, that of course is in the description below. Okay, as you can see for the SMH, key levels on the higher time frames, of course, is this key level of resistance now turning into support. I would like to see some buyers step in and potentially push this back towards the upside here on the SMH. As you can see, we're right into a key level support here, which is our 375. So our 375 key level support on the higher time frames, we can actually kind of readjust this level. Previous day lows, we can also mark out that pre-market lows here as well. So moving forward here on the SMH, we need to see the reclaim back above for that continued push up and towards that 378 here. This is going to be the #1 scenario for upside. If we reject off this level, then we can see a push right back down in towards that pre-market lows that we do have. So this is what we have for the SMH. As for the IWM, another gap down here as well, but currently buyers are trying to step in here in the pre-market. The key levels that we do have, of course, is going to be that 246. Other levels that we do have now is going to be that previous day lows, 250. So for the IWM coming to market open, right, reclaim back above, we can see that reclaim back above, we can see that push back up and towards that 250. If we reject right off the bat, right, reclaim back above later into the session for that push back up and towards that full gap fill. Only way you're interested in downside, pre-market low rejection for that continued push towards the downside here. So basically similar kind of game plan on a lot of these major indices. We do have a gap fill, of course, back towards the upside. So if we do want to see some downside, it has to essentially reject off our pre-market levels for continuation. Right, similar thing here on like the ES and NQ. We like to see a reject here off our pre-market highs in this gap fill. Right, so that's what we have for the major indices coming into today. Now I'm going to head on to some tech names. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. Okay, let me grab some water here really quick. Okay. All right, let's hop on to the tech names, some of the Mag 7s that we have coming into market open here now. First things first, let's go over Tesla. So Tesla's in a very key spot on the higher time frames. I'm interested in trading this, of course, both ways. Higher time frames, as you can see so far, kind of creating this downtrend here, right at a key level support, which is our 390. So as you can see, our 390 key level of support, if we can maintain above our 390, and let's say buyers can step in, we can see this nice mean reversion back towards the upside above that 390. If we break underneath that 390, hold underneath, then we can see a push down in towards that 380 and below, which would be our 360. So for Tesla, right, you're open to playing this, of course, both sides. If you go back onto the lower time frames here now, as you can see, some buyers kind of stepping in here off that 390, off that 387 here. So for Tesla coming into today and the key levels that we can have marked out, we can actually just refine this just a little bit more down in towards that 395. So coming to market open here, we have our previous day lows and we also have that 387. If we do want to see some upside here, bounce off our key level support for this mean reversion back towards upside. Or another possible scenario here is going to now be the reclaim back above our 395 for this continued push back towards the upside here as well. So this is what we have for Tesla upside coming into market open here. Of course, above our 395 or above that 386. If we do want to see some downside on Tesla and maintain, right, this higher time frame potential kind of wedge pattern, or sorry, this downtrend break that we do have. As you can see, last week we did kind of reject off this level. Now what we like to see is it maintain below our 394 for this continued push towards the downside. So for Tesla, if we do want to see weakness, continued weakness underneath our 395, hold underneath that 395 for that push towards the downside. Or now we like to see underneath our 386 for that continued push towards the downside here as well. So as long as we can maintain underneath that 395, I'm going to be leaning more bearish towards the downside. If we can break back above, then I'll be a little bit more neutral. And of course, if a lot of buyers step in above that previous day lows, then I'll flip a little bit more bullish. So this is what we have for Tesla coming into market open here, of course. Now let's go on to Nvidia. Let's go into the higher time frames on this ticker. So as you can see here for Nvidia, a lot of these names have been consolidating just because the overall market has been consolidating here as well. Nvidia, the key levels that we have marked out is our 170, and of course we have our 196. A little bit of rejection off this level. Now we're closer to the low of the range. So the key levels that we have coming into today is just going to be our last week's lows, which happens to be that 174. So we have our 174 marked out, and we also have our last week's highs. And these are going to be the key areas we're going to keep an eye out for. Plus, we have equilibrium drawed out 181. So if we do want to see Nvidia coming into market open, right, kind of bounce play here off our 175 for this potential mean reversion back towards the upside. Another possible scenario here is going to be that break above our 115 here as well. So potential bounce play off that 175 for a mean reversion, or now you're going to be looking for a reclaim back above our 177 for that pushback towards the highs here as well, back up and towards a 178. So this is what we have for Nvidia. If we do want to see continued downside here, we need to hold underneath that previous day lows, which is that 177. So for some downside underneath our 177, hold underneath, we can see that push down in towards that 175. So this is what we have for Nvidia coming into market open here. If we go on to AMD, another one that's right at a key level of support, which happens to be our 192. So as you can see here for the higher time frames, if you're just to mark out this key level support, right, 192, very key level here on AMD. If we can hold, right, potential mean reversion back up and towards that 220. Of course, if we break underneath, we can see that gap fill down in towards that 172. So for AMD coming into market open here, let's go back onto the higher time frames. Key levels that we're going to have marked out coming into today is going to be that 189. And then the next levels that we can have marked out is going to be that previous day lows along with that 198. So key levels coming into today, 189. If we do want to see some upside, right, maintain above that 189 for that continued push back up and towards our previous day close. Another possible scenario here is going to be above that 190s for that push back towards the upside here as well. So this is what we have for AMD coming into market open here. Only way we're interested in downside is the pop and fade off that previous day lows, or now we'd be looking for shorts underneath that 189 for that continued push back towards the downside here as well. That's what we have for AMD. Let's go on to Apple. Yeah, we'll go into gold and silver here in a second. Bro's going, yeah, the sun's out my window, so this is really bright. All right, let's go on to Apple. As you can see here on the higher time frames, Apple's kind of right back down into a key level of support. Key level that we have marked out is going to be that 254, which is all the way back from our earnings low here as well. So a very key level here on Apple. Multiple touches, 254 on the higher time frames. As you can see, I like to see buyers step in here off this 254, low of the range here as well. So for Apple coming into market open here, 255 is going to be key, where I like to see a mean reversion, push back up and towards that previous day close, which happens to be our 257. Another possible scenario here on Apple coming to market open, break above that 257, push up and towards that 258, which will be our previous day highs. So coming into market open, a lot of these ones are at key levels of support. Overall Qs kind of bouncing here as well in the pre-market, of course. So a lot of these tech names, they are at a very key point of interest. Only way you're interested in downside is if we get underneath key levels. So for Apple, would have to get underneath 255, potential push down and towards that pre-market lows. As for Google, key levels that we have marked out as well, if you're going on to the higher time frames, we're actually breaking underneath a key level support here, which is that 296, which happens to be our previous day lows. So for Google, we need to see the reclaim back above for any sort of continued pushback towards the upside. Shorts are only in play if we reject here off that 296 for that continued pushback down and towards our pre-market lows here. As for Microsoft, key levels that we have marked out. So I'm fairly bullish here on Microsoft. I like this one on the higher time frames as well. Of course, we do have like kind of that 200-week moving average. So you can see a little bit of buyers stepping in. If we go back onto the lower time frames here on Microsoft, the key levels that we have moving forward is going to be that 402. So 402 here is going to be key along with our 412. If we do want to see some push towards the upside, bounce here off that 402 for a push up and towards that 412. Another possible scenario here now is going to be above our 412 for continuation. But keep an eye out on Microsoft for a potential pullback long moving forward based off the daily chart. If we break underneath our 402, then we could see a little bit of a pullback down in towards our 400 and below, which would be our 396. Let's go on to a few more tickers that we have. Meta currently at the bottom of the range here. Let's go on to this one. As you can see for Meta, really not too much to talk about on this ticker, but as you can see, we're basically just consolidating inside of this range. Not too much, so until we break outside of this range, be a little bit more cautious here on Meta. But key levels that we have marked out, if you're to just draw out our basically our range low along with our range high, currently right back down in towards key levels of support, which happen to be our 632. So moving forward here on Meta, potential bounce play here off our 632, push back towards the upside, 645 and 650 here is in play. Key levels is going to be that 643. So potential bounce play here on Meta for a pushback towards the upside. Another possible scenario above our 643, push back up and towards our previous day highs, 650. Only way we're interested in downside really now on Meta is if for it to pop and fade here off that previous day close, or of course now it's going to be underneath that 630, continue push towards the downside here as well. All right, for Amazon, key levels that we have marked out is going to be that 211. So Amazon filled that full gap that we talked about last week. Currently now we're rejecting off that level, and now we're breaking back underneath this 211. So moving forward here on Amazon, right, reclaim back above. We can see this push back towards the upside, but it's going to have to get above our previous day lows, and that's going to be the reclaim level. So for Amazon, above our 211, or of course above that 212.50 for that continued pushback towards the upside. If we reject, we can see a push all the way back down in towards our 211, and of course our pre-market lows if we do reject off this 211 here for a push down in towards that 207.50. And then for Netflix, let's go on to this one here on the higher time frames. This one, in my opinion, still fairly bullish compared to the overall market, right? Big drop on the markets. This one's still holding up. Key levels for Netflix is going to be our 98, along with our 96 that we have here on the higher time frames. So for Netflix, reclaim back above, we can see this push back up and towards our 99.50 and above, which would be our 100 key psych. Another possible scenario is going to be right above, or sorry, basically your pre-market low bounce for continuation higher. Really the key levels here is just going to be our previous day lows along with this 98. So that's what we have. Only way you're interested in downside here would have to be the rejection here off your 98 for this continued push down in towards that pre-market lows, 97 here on Netflix. So that's what we have on a majority of these tech names coming into today. We'll kind of go over my main game plan here in a second. But if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay, let's go on to Palantir. Then we'll go into gold and silver. We'll definitely check out oil here in a second as well. As for Palantir, overall markets, as you can see, nice kind of bounce off the lows, 128. We are back in towards a key area here for Palantir. So the levels that I have marked out is going to be our 150. Let's actually just get rid of some of these ones and mark out our last week's level. So key levels for Palantir is going to be our 147, which we had multiple touches last week. We also have your 150. Other levels that we have marked out here as well is going to be that 154. And then we can mark out our previous day highs, which happens to be our 161. So coming into market open here, let's just keep an eye out on the reaction that we have off our 154. If we can bounce off our 154, we can see this mean reversion back up and towards the highs. Right, another possible scenario, of course, is going to be the reclaim back above our previous day close for a push up in towards that 161. So this is what we have for Palantir coming to market open. Of course, if we reject off that 154, we can see a push all the way back down in towards that 150 here on the higher time frames. So that's what we have for Palantir coming into market open here, of course. If we go into a few other tickers, right, Oracle, something to keep an eye out for. This one does have earnings coming up fairly soon. This is going to be on Tuesday, so that's tomorrow after close. So you just want to be a little bit cautious of this one, but based off the higher time frames, as you can see, really solid retracement, essentially all the way back down and towards key levels for Oracle. A little bit of a base here so far. We'll see the reaction that we do have for earnings, but potential kind of move back up and towards our 180 here is in play. As for a few other tickers, let's go into some memory, right? MU, SNDK, kind of right at a key level support here. So I would like to see some buyers step in right off that 370, along with our 368. Higher time frame key level here as well. So I'd like to see buyers step in, coming to market open, and a potential push back towards the highs. Shorts, of course, are in play here underneath that 368. So that's something to keep in mind. Previous day lows here, mark this out. Reclaim, push back towards upside. Rejection, we can see continuation down in towards our pre-market lows here and below. As for SNDK, key levels that we have marked out is our 544. As you can see here on the higher time frames, 544, really solid level on the daily chart. If we were to just mark this out, as you can see, currently we're trying to break underneath, and now reject off this level, and we can see potential continuation lower. So for SNDK coming into market open here, key level, as I mentioned, is going to be that 544. Other key levels that we have marked out as well is going to be our 530. So coming into today, key levels 5, basically our previous day lows, 527.50s. If you do want to see continued downside, pop and fade off our previous day lows for this continued push back down in towards our pre-market lows, which will be our 507. If we do want to see any sort of upside, reclaim back above our 530 for that push up in towards that 542.50. So this is what we have for the SNDK chart coming into market open here. As for a few other charts, we can kind of go on to Intel. This one's dropping. A lot of the semis, of course, are dropping here just because of the SMH, as you can see on the higher time frames. SMH has been dropping here as well. One thing to note, HIMS, this one really solid bounce, up 50% in the pre-market here, which is absolutely solid. I actually bought the dip a couple weeks ago. I have like a 15 average, which is nice. But for HIMS, nice kind of pop. Key levels, of course, are a couple of these gaps that we have back towards the upside. Really, next levels that I have in a major target is going to be all the way up in towards our 29 and our 30 key cycle level that we have, right? We had news pop and kind of faded towards the downside. Other levels that we have marked out, we can just mark out our 24 or 2350, multiple touches here in the pre-market as well. So at least for HIMS, if you do want to see some upside, right, reclaim back above, maintain above our 2350, we can see a push up in towards our 29 here on the higher time frames, of course. All right, let's go into gold and silver here. Let's go into the higher time frames. Let's go into the daily chart. Overall, gold still maintaining above key levels. Higher lows are being built here as well. Key levels that we have coming into today is going to be our previous level of resistance, which, as you can see, multiple touches that we like to see turn into support, which is going to be this 5150 essentially. So as long as we can maintain above these higher lows, we like to see this push back towards the upside. Of course, if we break underneath key levels, break underneath market structure, we can see a potential push back towards the lows, which will be this higher low pivot point here as well. So for the levels that I have marked out, what I have here is our 5140s, which, as you can see, we have multiple touches. Along with our higher time frame key level, we have our 5000 key cycle level. So if we do want to see upside, reclaim back above for a potential push back up and towards our pre-market levels here and above. If we reject off this level, we can see a push right back down in towards our 5000 key cycle. So this is what we have for gold coming to market open. If we go on to silver, of course, on the higher time frames, key levels that we have marked out. Really, this one, after this big drop that we had earlier, this was earlier in the year, silver has been consolidating more than anything. But for the key levels that we have moving forward, we're going to mark out our 88 key cycle, and we also have our 76 key cycle level here as well. So if you do want to see some upside, reclaim back above for this continued push back up and towards our 95. If we break back underneath, we can see this potential mean reversion back down in towards our 76 here on the higher time frame. So really, so far, we're just kind of consolidating inside of this hourly range. So we like to see the break above or break below for any sort of continuation. All right, let's go on to some oil. We can go on to the crude fund, but as you can see here for USO, key levels, right, you can see a pretty big breakout. If you're looking at this on the weekly time frame, really just been consolidating, finally having this super solid break towards the upside here on USO. And now you can see the key levels that we're going to have marked out is going to be number 106. And you could have this level all the way back from October of, this was from 2018. So for the key levels moving forward coming into today, what we like to see and what we should have marked out is, of course, our previous day highs, and then we can mark out our pre-market levels here. So key levels that we're going to have marked out, pre-market highs, we can mark out our pre-market lows, and other levels is going to be that previous day highs all the way back down in towards our 110. So coming into market open here, let's keep an eye out on our pre-market highs along with our pre-market lows. If we do want to see some upside, break above our pre-market highs, this is the one scenario that we do have. Another possible scenario is going to be the bounce off our pre-market lows for continuation towards upside. Another possible scenario, of course, we can use that opening range candle for some sort of pushback towards the upside here as well. So we have a couple scenarios on USO. Just keep an eye out on our previous day lows, of course, along with our previous day highs. Only way we're interested in downside is going to be the break underneath our pre-market lows for potential mean reversion back towards the downside. But as you can see, based off the higher time frames, right, weekly breakout, I do expect some more upside here on the markets, right, after having a lot of consolidation here, right, nice weekly candle close, we can expect a lot of continuation. So I'd like to see gravitate up and towards our 130. We can take a look at the futures, but we have a lot more key levels towards the upside here. So as long as we can maintain above key levels, right, which now in this case, previous day highs, and then we can also mark out that pre-market lows, which is going to be key coming into today. Okay, let's go on to the game plan coming into today for the major indices, and then I'm going to get ready for market open here. So basically for today, the key levels that I do have marked out is just going to be the futures pre-market highs. So that's going to be key here for ES and NQ. So as you can see, right, we can just look at the futures charts today since that gives us a little bit more information compared to the SPY and Qs. But basically what you can have marked out is going to be that previous day, that overnight highs. So for the ES and NQ, if you want to refine your levels, you can just kind of refine it up and towards our pre-market highs if you'd like. That's both for the ES and NQ. So coming into today, that's going to be the key level. If we reject, so far we're having a little bit of rejection, we can see a mean reversion back in towards the middle of the range. If we reclaim, we can see a pushback towards the upside. If we're looking at this on the NQ, similar thing here. We can just have marked out our pre-market highs. This is going to be the key level that we have marked out. Reclaim, push back up and towards that full gap fill. If we reject, we can see a push down in towards the middle of the range, which will be our 24,280. So that's going to be the key level on both the futures charts coming to market open. For the SPY and Qs, you can refine your levels here as well up and towards our pre-market highs if you like. So it would be your 595 here on the Qs, and then for the SPY, it's going to be that 668. So based off that, coming into market open, we're going to keep an eye out on our pre-market highs here. Some of the main watches that I do have coming to market open is going to be number one, Tesla off our previous day lows, higher time frame. This is basically, going to be my main watch coming into today. So right at a key level support, open and playing this both sides, as I mentioned, potential bounce play, or of course, shorts are in play underneath 390. So for Tesla, keep an eye on Tesla off our 395 along with our 390 coming to market open. As I mentioned, pop and fade here is in play, or of course, shorts now underneath that 387. As for some other tickers, let's keep an eye out on Nvidia off our previous day lows here as well, off that 177. And then for other tickers, we can keep an eye out for AMD here as well, right? Another one off our previous day previous day lows is something to keep an eye out for, off our 192. As for every other ticker here, right, keep an eye out on our key levels, previous day lows, of course. But the main thing coming into market open here is just going to be that pre-market level here on the futures. So we'll see the reaction that we do have coming into market open here off that level. And based off that, we'll kind of keep an eye out on the reaction, right? A lot of the markets lately, right, higher time frames, we are trying to break underneath this key level support. So right here on the SPY and Qs, today is fairly important here with the gap down as well. So as you can see here on the higher time frames, if we can break underneath that 592, really next level all the way back down in towards that 580. So we'll see how this daily candle closes. That's going to be fairly important today. And we'll see if we can maintain weakness underneath that 594. But I'm still open and playing both sides here, of course, with this gap down. We'll see if we can end up filling that gap or reject off that previous day lows. But basically, we're going to keep an eye out on that reaction that we have off our pre-market levels coming to market open. Of course, as I mentioned, we are open to playing both sides since the market has been ranging a lot more mean reversions. Hopefully, we can see some more continuation here moving forward. So excited about that with this kind of gap down. The VIX is at 30 today. So that is something to keep in mind. If you are trading options, it is going to be fairly volatile. So make sure to size down because there's going to be bigger moves in the market. But besides that, I'm going to call it a day and get ready for market open here now. So hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. And I'll see you guys all tomorrow. All right, take care, everyone. Peace.